I just want to say off the bat, I was framed. It is absolutely fantastic to be here with you for another year. Last night it was great to see friendly faces from many years past and meet some new ones. This is our 12th summit. We have, for your viewing delight, 52 sessions with 62 experts and 200 industry peers. Summit is big enough for you to interact with a cross-section of your peers across MGAs, carriers, retail, and wholesale brokers, but it's small enough to be friendly, accessible, human, and as I look out, I do not see any robots in the audience. In this spirit, I always like to start these sessions by encouraging everybody to meet people, maybe somebody you haven't yet met. So let's just take a minute or two. If there's somebody on your table or next to you that you don't know, maybe just introduce yourself, say something interesting about yourself and why you came to Summit. Let's just do that for a couple of minutes. Now that you had found your drinking buddy for later, I want to share a quick update on ReSource Pro. Now, it's really important to us that we make sure that Summit is not about us, is not about ReSource Pro, but we do this sometimes to a fault. We're often asked for more information about how different clients work with us. And we do have some sessions this year, if you're interested, that you can participate in. But I thought you might be interested just to hear a few updates about how we're doing, where we are. So, as of today, and it changes almost every day, we have around 11,000 employees across 15 offices in China, India, the Philippines, Serbia, the US, Mexico, and hot off the presses, our next office, soon to be opened, is Malaysia. We place talent according to the interests, skill sets, and needs of our clients. These are our client segments. We have a retail vertical, MGA and wholesale vertical, and a carrier vertical. And we have hired practice leaders to develop specialized, unique solutions for each of these client segments. We're also building an ecosystem of companies that have complementary or adjacent offerings to our clients in various diverse areas, obviously business process management, technology services, data services, advisory, regulatory compliance, and premium audit. And these are some of the companies that have joined the ReSource Pro family: MIS, Helix, Compliance, which was ILSA, and Lowry. And we're delighted to have them as part of this family that can provide more services that are relevant to you. These offerings fall into two main buckets: insurance process services, basically managed services where we help support the efficiency of your operations, and technology services, which is designed to support our clients on their technology journey with advisory, systems integration, data migration, AI automation, and administrator services. All right, so enough about ReSource Pro. I wanted to share and provide a little window into how we look at our industry, in particular through an operations lens. And I want to focus on two key dynamics that I think are most relevant to improving insurance operations: fragmentation and technology. So, the insurance industry remains complex and fragmented. In many ways, I think this may be the biggest challenge. There's an external aspect of this. We have 30,000 retail agencies and 2,000 carriers and 1,200 wholesale brokers and 50 lines of business and 3,000 different industry codes and almost innumerable variances of risk. court applications, 50 different state regulatory agencies. All of this, of course, adds complexity to our operations. But I think the biggest fragmentation is not the external environment, but it's within your own organizations. How people work is different. How they take care of clients is different. How you manage risks and process work in an environment where everyone is under pressure and no one has the luxury of time. And we see it that all insurance organizations are facing this great complexity of integrating their operations while balancing standardization versus customization. So our work is a reflection of your complexity. So let me share with you what we see. So we have semi-structured or unstructured PDFs on 70% of the work we do for you. Of course, there are high quality expectations in a regulated environment, a lot of variability, and low volume per task. How does that play out? Well, we have around 300 standard tasks that we perform for our clients. But those 300 standard tasks, we have 60,000 documented versions, documented standard operating procedures for those 300 tasks, with an average of about 1/10 of an FTE per task. We also have about 70 requests for procedure changes every month for every client. And of course, very, very high demands on quality. How does this look for our clients? Well, let me share our top 10 clients by volume. You can see this in a little bit more detail. Client A has 91 standard tasks that we perform and 5,000 different ways that we perform those tasks, with an average of about 55 SOPs per task. Client 2 has 90 tasks and 7,000 standard operating procedures per task, with an average of about 79 SOPs per task. Well, let's go a level deeper and see what else we can discover. So this is from a client where we're doing two different types of tasks. We're issuing proposals and ordering loss runs. And I want to take you through this because I think it's very revealing. For issuing proposal, we have an average handle time of between 50 minutes and 500 minutes, depending on the complexity of the proposal. The blended average handle time is 150 minutes. We have an annual volume of 28,000 and a turnaround time of 3 days. For ordering loss runs, we have a AHT of between 10 and 30 minutes, a blended average handle time of 18 minutes, 150,000 annual volume, and a turnaround time of between 5 and 30 days. Now we have, for issuing proposals, 18 standard operating procedures for that client, and for ordering loss runs, we have 7. But within those standard operating procedures, we have a number of variation points. These are different requests from different people in different offices as to how that standard operating procedure should be followed. In the case of issuing the proposal, we have 150 variation points. In the case of ordering loss runs, we have 33. So you multiply the standard operating procedures by the number of variation points. We have, in fact, 2,700 total variation points for issuing proposals and 231 for ordering loss runs. Is that surprising to anyone? I can't see, so it doesn't matter. Now, we think of variation points in terms of necessary variation points and unnecessary variation points. Now, necessary variation points may be driven by the line of business, the program, the carrier, the systems. Unnecessary variation points may arise from varying habits or styles of offices or account managers, but offering minimal business value. For example, when sending a loss run request to carriers, there may be different email wordings used across offices, even though they basically contain the same information. So again, this is a reflection of how work is done in your offices. And here we see that there are, of the 2,700 variation points, about almost 1,500 unnecessary variation points based on the analysis that our team did, which is about 55%. And in the case of ordering loss runs, it's 189 unnecessary variation points, which is 82% of those variation points. So what kind of impact would it have if we were able to eliminate or remove the unnecessary variations? Well, if we could eliminate 1,494 unnecessary variation points from issuing a proposal, you could take that old blended or the current blended average handle time from 150 minutes down to 105 minutes. You could take the turnaround time from 3 days to 2 days. In the case of ordering loss runs, you could take the blended time from 18 minutes to 14 minutes, and you could reduce the range of the turnaround time from 5 to 30 to 5 to 13 days. In terms of average handle time savings, that represents 30% and 24% respectively, or 22,000 hours annually, or 11,000 hours and $500,000 of direct savings and $286,000 of direct savings for 2 tasks. Now, this is not insignificant, but think of the impact, the broader impact of reducing the turnaround time from 3 days to 2 days for issuing policies, and from 5 to 30 days to 5 to 13 days for ordering loss runs across thousands of transactions. How much faster could you respond to clients? Could this help improve client acquisition or retention rates by 1 or 2 points and help delight clients? There are other impacts from these variances. Automation challenges. It's difficult to automate when there are so many versions of the same work and so many moving parts. Service levels. Variations create inconsistency, affecting quality, customer satisfaction, E&O risk, and retention. Data discrepancies. Inconsistent labeling of activities can prevent clean data and clean activity reports. And total cost of ownership. Unnecessary variation can have ripple effects across organizations and increase operational costs and reduce productivity. So the benefits of standardizing, optimizing, and streamlining these variations can be enormous. So the second big market dynamic or challenge is that technology, data, and AI hold tremendous promise. We all believe that. But digital readiness is lacking. What are the building blocks of digital readiness? Well, automation is rigorous. It requires standardization and discipline of processes. Common systems and clean data are critical. I almost said criminal. It's criminal not to have common systems and clean data. I think that's what I meant to say. Users need insurance knowledge and AI and technical skills. You know, digital readiness, I'm reminded of a conversation I had with the CEO of a top 10 broker who shared with me that he had fired his chief data scientist. And I said, well, why would you do that? And he said, well, look, I had a great meeting. The chief data scientist came into my office and told me all these fantastic applications for what we could do with our data, how we could understand our clients better, how we could understand our business better, how we could look at lines of business and prioritize here and prioritize there. And I said, this sounds fantastic. Let's go do it. He said, well, hold on a second. First of all, we have to clean the data in our systems. Great, let's go do it. Well, before we do that, we have to change behaviors and train people and reinforce that. Okay, how long will that take? About 7 years. Come back in 7 years. So digital readiness is rigorous, and it requires a combination of deep insurance, operational, and engineering skill sets. We think of digital readiness as a journey in 3 parts. Now, there's been a lot of industry consolidation over the last 10 years. And there are now large platforms that include many offices that have not been fully integrated. Back office, front office, processes, systems. And so we think of integrate, optimize, digitize as, first of all, under integrate, it's improving collaboration across departments, standardizing workflows, unifying systems, and centralizing functions. Optimize goes deeper. It's documenting SOPs, streamlining end-to-end processes, and solving operational pain points. And digitize is cleaning data, integrating systems, testing AI, and data science use cases. So there's been a lot of consequence to having these platforms that have so much potential, trapping growth, and having limited ability to fully leverage automation and data. One of our clients told us that if they could integrate their systems and leverage data effectively, it would create $500 million of new revenue opportunities. But if you think about what's actually involved in this journey is not about technical or technological wizardry. These are analog activities of changing behaviors and training and setting new processes and standards. AI expertise is ultimately where we want to be heading, but there are no shortcuts to real transformation. So, I'd love to do a live poll with you. If you have your phone and take the QR code, it'd be great to see where you feel your organization is on this journey. And here are options. Number one, we consider ourselves a digital agency, broker, MGA, or carrier. Number two, we have clean data and consistent procedures. Okay, this is hard to read, keep up with. You guys are too fast for me. We're at an early stage, that's another one. We do not have clean data, procedures, and processes. And we are several years in and making good progress. That's great. Well, this is fascinating. Thank you so much for sharing. So, of course, I wouldn't expect that this group of people and agencies and MGAs and carriers would be anything other than already at a very good pace in this process. And we can share this data with everybody later. Okay, let's keep going. So this graph indicates how business performance on the y-axis and enterprise value on the x-axis are magnified as you integrate, optimize, and digitize your insurance operations. In fact, we see moving up this continuum as being the key that unlocks all other performance benefits: quality, productivity, client centricity, and ultimately improved profitability. But it's easy to get distracted. We're all trying to hold on to the AI automation tram. We all want a seat on the tram to make sure we're not going to get left behind. What we will find when we're inside the tram, we do not know, but we are not going to let go. So how are we preparing for this AI world? And which of the following is most true for you? Let's do one more. Let's do another live poll. How much AI training and project work have you been involved in? I'm going to read quickly. We have training and policies on how to build AI. My team collaborates with our IT team on AI initiatives. My team collaborates with outside experts. I am a self-trained prompt engineering guru. We are at an early stage of AI. So almost 60% are at an early stage. We've got some folks who are collaborating with their IT team. Few have training and policies, that's great. Some are collaborating with outside teams. And we have 8%, I want to meet these people, the prompt engineering gurus. So this is what hanging off the back of an AI tram looks like for commercial lines carriers. This is our research team did this analysis. 9% have no activity or plans. 38% are studying and discussing. 41% are investigating and piloting. And 13% have implemented some use cases already. These use cases we see typically around facilitating submissions, underwriting, claims triaging, and aerial imagery for property. In the retail side, this is what hanging off the back of the tram looks like. We have about 80% of agencies that are studying and talking about AI, and about 20% have use cases. And some of the use cases for them are AI for lead generation and likelihood to purchase, autofill quoting platforms, and business intelligence for retention and identifying customers at risk for defection. I wanted to share with you some of our experience. This is the kind of request that we receive from clients. This is a client that wanted to automate loss runs. But they had lots of process variances in terms of terminology, labeling loss runs, attaching to their agency management system, setting up activities in their agency management system, and follow-up frequency. And this was causing lots of processing inefficiencies. So our team mapped out all the current workflows and laid out the process variances between offices and account managers. They identified 7 sets of workflows and 157 variation points, which basically represented areas for optimizing across the 26 offices. Through consultation, we were able to agree to eradicate 8% of the variances. There was a real reluctance to eradicate more than that 8%. To enhance workflow efficiency and address the remaining 92% of variances, the team developed an automation tool that was pre-configured with the customization needs of each office. This tool automatically mapped documents to the corresponding offices. The result of this is that it definitely improved efficiency and accuracy. We saw automation time reduced by 30%, and we decreased internal cross-training time by 56%. These are impressive results, but remember, these were 8% out of possibly 82% unnecessary variation points. Is this the upper limit of what agencies are willing to commit to, given the change management challenges? How much higher could we push that 30% to if we could have more rigorous standardization? Now, with tools that we've developed, we are confident that we can exceed 70% process time savings. Gartner has the concept of the hype cycle. I'm sure everyone's aware of this, for evaluating where any new technology sits in its evolutionary curve. For sure, there's excitement, wonder, and considerable investment flooding the zone. But how pervasive and transformational is generative AI at the moment? Most of us believe it will be, but outside of edge cases, for commercial P&C, where do you think we are today? So let's do one more live poll. In your opinion, where are we in the AI hype cycle? At the innovation trigger, like the early stage? At the peak of inflated expectations? In the trough of disillusionment? At the slope of enlightenment? Or have we arrived at the plateau of productivity? Well, this suggests that 2/3 of us feel that we're still at a very early stage, so we've got much more inflated expectations on the way, and then a big crash of as we hit that down curve in the trough of disillusionment. That's a Great phrase, isn't it? The trough of disillusionment. I hope none of us ever find ourselves in the trough of disillusionment. I'd like to share one more case study with you to show why getting past the hype cycle can be challenging, but why the effort is nevertheless worthwhile. This is another client of ours, a leading insurance wholesaler, an underwriting manager with 1,000 employees and 40-plus offices. From 2018, they wanted to centralize, standardize, and automate their binding process to produce faster turnaround and reduce costs. So how we approached this, we did lean mapping. We mapped out all the major steps in the binding process. That took us around 3 months. We centralized the work and set up a shared service center. And we piloted standard procedures for their largest office, and that took around 2 months. We then rolled it out across 40 offices with a defined centralization plan, and we continuously refined, identified KPIs, implemented 300+ recommendations, and continue to monitor progress. These were the results. We had centralized about 50% of the binding process. We were supporting 600 underwriters. We'd saved 75,000 hours, or about $1 million of cost. We maintained the quality level, and we had a 1 to 2 day turnaround for almost 100% of the work. And we cut the office adoption time from 3 months to 2 weeks. But the key point is, after 6 years, only now do we feel that we're ready for AI and automation. It took that long. So, are we going to be displaced, disrupted, dematerialized by your friendly AI agent? Well, not soon, maybe not ever. Let's hear what Ali Miller, Global Head of Machine Learning at Amazon AWS, has to say.
Using AI in your job does not mean that expertise is dead. Expertise today is vital on those deep industry use cases. If you're prompting in a space that you know very, very well, your performance with AI shoots up. If you're prompting in a space that you don't know well at all, you can't validate the output. As I think about expertise in the future, it's going to widen. We're going to have spaces where industry expertise still really matters, but I honestly think it's going to be industry expertise with AI, where it's not just the actual content or the science behind something or the behavior behind something. It's going to be literally, how do you do your job with AI as a co-pilot?
So are we going to be displaced, disrupted, and dematerialized? No, I think the answer is that all of us are going to become more important. In our regulated world of insurance, knowing what looks right and what looks wrong, understanding nuance, training, validating, and monitoring models and the assumptions behind them will be critical. Providing a human, personalized experience will be premium. So our message is, learn new skills, new tools, but don't ignore the environment inside your organization, where work still lives with all of its glorious and inglorious customization. Figure out and negotiate what is important. Integrate your platforms and your practices. Optimize your workflows and service levels. Elevate deeper insurance training and expertise, and find use cases and partners who can help you make progress. The good news is that everybody here is on a similar journey, so you have a room full of peers to explore ideas together. Finally, we at ReSource Pro are on a similar journey with you. We're constantly looking to apply best-in-class large language models, machine learning, natural language processing in how we deliver our work for you. We have the benefit of seeing this across thousands of insurance P&C clients. We see an opportunity of building AI agents from our 60,000 standard operating procedures and process knowledge. Each AI agent will likely do some small part of the work given the fragmentation of the work. But over time, step by step, task by task, process by process, we see developing hundreds and thousands of AI agents that will eventually be transformative to insurance operations. Speed is critical, but accuracy is more important, because accuracy in our regulated industry is paramount. E&O claims in the age of AI will be just as disruptive and costly, if not more so, than they are today. So we invite you to join us, be part of our innovation teams, exploring ways to build AI agents and tools to improve insurance operations. Which finally brings me back to the purpose of Summit. It is our goal to provide you an environment where you can explore new ideas, learn from your peers, and elevate your impact. And at the same time, let's have some fun in the process. Thank you so much for your incredible partnership.